Chalinda, over to you.
Super. Thanks, Aakash, and thank you to you and team both for giving me the opportunity on your podcast. Greetings to everyone who's listening in, or now or later. So my name is Chalinda. I am based in sunny Sri Lanka, even though it's a little gloomy today. It's the monsoons. Um, I've spent the last 15 years in the startup ecosystem. Started off as soon as the civil war ended in 2009. Uh, been building companies, working for government, working on policy, incubators, accelerators, and for the last 3.5 years with nVentures, investing and scaling companies. Yeah, that's a little bit about myself.
Awesome. I think we'll get to know more about you and nVentures and your portfolio companies through this conversation, which will largely be focused on the Sri Lankan startup ecosystem, although I know that you guys are more widespread than that. A little bit about me. I'm based in Bangalore, not quite sunny as Colombo, but can do with the weather here. Been in the digital asset space for a while, joined Tim to be the Asia correspondent of The Realistic Optimist. We are a startup focused newsletter read mainly by venture capitalists. For instance, we have readers at Sturgeon, Razor Capital, I2I Ventures. What we do is we conduct in-depth interviews with startup founders and investors in these emerging market regions. One of the things that we thought we would do to supplement our content that we have in writing on our website is do AMA. So this is the third AMA that we've had. We've had one with Sturgeon Capital, which covered Central Asia, I2I Ventures, which covered Pakistan, and now we're covering nVentures in Sri Lanka. So we've got a good Asian appeal here, but hopefully we can expand that to a more global appeal. Like I said, this conversation would be fairly centric towards the Sri Lankan market. And as a point of introduction, that's my first question to you, Chalinda, is where do you think the Sri Lankan startup ecosystem stands currently?
I would say it's pretty much early days. As I mentioned, the whole startup ecosystem kind of started blooming out at the end of the civil war, which was in 2009. So as an ecosystem, we are about 15, 16 years, very, very much early stages at the moment. But I think if you look at the tech ecosystem in Sri Lanka is a little bit longer than that. Historically, we've built the world's fastest stock exchange, which was acquired by the London Stock Exchange again in 2009. Very recently, we had the open source middleware company, which was acquired by EQT, was funded by Goldman as well a few years ago. So we've had a rich history and culture of building kind of innovative companies, primarily in the B2B space. Obviously, not quantity wise. It's not like we produce unicorns and 10 to 100 companies a year. But we've been in the high end in the last, I would say, 20, 30 years. But in the last 5 years, post pandemic, I think the acceleration has been significant. We've also seen a lot of Sri Lankans who migrated for various reasons throughout history, coming back, starting companies. And in fact, this is a clear indication. If you look at even markets like India, that's how the whole startup ecosystem kind of kickstarted. So the best way to kind of explain is Sri Lanka is today where India was towards the late 90s, early 2000s. So, things are kind of brewing up, and it's an exciting time to be here.
Awesome. That sets the stage for a bunch of questions that I have. And the way you sit is you're the managing partner at nVentures, one of the largest funds that is focused on Sri Lanka, and you invest fairly broadly. Right? So your portfolio includes fintech companies like Mintpay, WealthOS, health tech like Flash Health, whom we've spoken to, MedEasy, and a few SME tech companies. So I have two questions here. You mentioned a few insights into sort of the opening up of Sri Lanka post the war, and in Sri Lanka being where India was in the 1990s. What are your insights on identifying these companies as the local economy gets more opened up?
Right. So if you look at any startup ecosystem, especially the mature ones, right, the most famous startups tend to be B2C companies. So if you look at the US, whether it's Facebook, Google, these are all kind of B2C companies. And they attract a lot of capital. They also attract a lot of the limelight as well. B2B companies typically don't uh, attract a lot of limelight. But Sri Lanka is just 22 million people, so you don't have a lot of opportunity to scale. So when we started our ecosystem, 10, 15 years ago, much of the startups that came in that first wave or first and second wave, as I would say, focused on the B2C side of things. Um, but now, our vision 3 years ago when we started, what we felt was our unfair advantage is in the B2B space. And that's why we focused nVentures as a B2B investor in the VC space. Within B2B, we originally wanted to do a few domains, but then we kind of, just like we tell entrepreneurs to focus, we thought we'll follow our own advice, and then we wanted to focus, and then it so happened to be we focused on fintech. So large portion of our portfolio is in the fintech space, even the ones that are in the education or healthcare. There is some element of fintech that is underlying in some of these investments. But where we feel right now is, so we like what I call startups that are solving the plumbing, because this is what we see in emerging markets. The markets are way too fragmented. So unlike in the US, where you be very, very specific and kind of go deep, you have to go across. So we call it a full stack startup, right? So because the markets are so fragmented, you kind of be in different verticals, and then kind of take things forward from there. And that's what has worked for us, where all of our investments and most of these companies are not very uh, startups, right? Because they're focusing on plumbing. And as I said, you need to get the plumbing right. Then only you can build certain the rest of it on top of it. So you build the rails, then you build the trains essentially, and that's where we've kind of that was our philosophy, and that is now is what we've kind of driven for the last 2 to 3 years.
Interesting. And when identifying the sort of plumbing companies, is there a framework that you have? Is there a key list of insights that you'd like to look at? Is there maybe a quantitative certain metrics that you look at?
There's a few. So from a market standpoint, yeah, we look at, okay, how is it fragmented? What are the missing pieces? And when you're trying to put it into together, what's the order that you do that, right? And so that's from a market standpoint. From a founder standpoint, again, like I said, it's not all founders like to work on the plumbing, right? So there's a whole bunch of that becomes a kind of a I would say evaluation criteria. Are these founders ones who like to be on the limelight? Because that, again, like I said, B2C tends to be a little bit more sexy, and B2B tends to be unsexy because it's a lot of stuff happening in the back end, and you got to be able to kind of this thing. So domain knowledge, how they are integrated into that system. So you look at found the market fit, found the problem fit. Is it something that they understand? So on and so forth. And then in terms of the other most important thing that we look for is speed of execution, because your only advantage as a startup against everything else that is happening is just speed. So we want to work with founders who are not kind of afraid to fail. They'll do experiments almost on a weekly basis. They'll get that feedback, have a feedback loop, so they're constantly kind of pivoting and adjusting their ways, and then taking forward. So we spend most of our time trying to figure out, is this the right founders? And what has helped me personally with nVentures, and because I've been doing this for about 15 years throughout my entire career, is that I want to make sure that when I invest in a company, it's also a company that I would like to work if I was an employee. Like, would I would like to work or report to this founder? That becomes a kind of like an important question in my. I have a whole bunch of questions that I do go through, sort of like a checklist, but that's one of the things that are on top.
Could you shoot us maybe 2 or 3 questions that you go through?
Oh yeah, so that's one, right? So that's very much on top. Is this a founder that I would want to report to, or would I love to be part of this company? The second thing about the other part of one of our philosophy is that we have this whole peer-driven culture, even within nVentures. Our relationship with our LPs versus our partners, people in our company, we have a complete peer-driven culture. And the reason is that you want to make sure that you don't kind of end up intellectualizing opinions, right? So then it becomes whose opinion is more important and not the truth. So we want to find founders uh, that have a similar ethos with them, and their employees or their founding team as well. The second stuff, so that's one of the things. We also look at whether they're solving something they've personally kind of experienced, or whether they're just trying to catch a trend that's kind of doing. What is that what really drives them. And we prefer have investing in founders that have personally kind of faced this particular thing, they've gone through it, or they know it's something closer to them. So those are some of the basic ones. I mean, very, very common to all the other investors, I would say. It's just that we would prioritize it in different ways.
Got it. Fintech aside, and the plumbing of fintech aside, you have a portfolio that spans health tech and a lot of SME tech as well. How does how do you differ in looking at, let's say, a fintech company versus these other companies within your portfolio?
I think because we play in the pre-seed and seed stage, bulk of the things that we look at is the same. The domain variation is, I would probably say, is about 20 to 30%. And it goes to the same thing. Is there a way that we can build a full stack company out of this? That's one thing that we look at. In the example that you mentioned earlier, Flash Health, that was one of the things that attracted us to Flash Health, was that we saw that the market is so fragmented. There is definitely an opportunity for you to kind of build a full stack startup, which will be on building certain value propositions for whether it's doctor consultation, medicine delivery, labs, to all of these things. But we've also have, if you take a company like Dossiers, which is AML, then it's very specific. Then it's about, can we go deep in it, covering eKYC, what's that landscape, and so on and so forth. So those are the little things changing, but bulk of it is, like I said, because it's a very early stage. Some of it is just gut, right? And that's what kind of, I think, separates us as an investor, is that myself and all the other partners, we've all been entrepreneurs, we've all built, we've all failed, we've also been successful in raising capital and delivering exits to successful exit and returning capital to our investors when we were entrepreneurs. So there is a very high element of gut that goes through. And we've invested in I think there's 3 or 4 companies where we've invested purely on a presentation, and there is no product. But having a conversation with the founders, we feel that, okay, these guys are onto something, and then we'll take a bet on that.
Interesting. And are you looking at the Sri Lankan economy based on certain foundational changes that are happening? For instance, you invested in Mintpay, there's a rise in consumer spending. or flash health as a rise in aging population. Are you looking at these broad Sri Lankan demographic metrics before investing in these companies in these industries?
Yes and no. Yes, in the sense, yes, we look at a few of them, but they're not really, it's equal across the companies, right? So, for an example, there is plenty of, historically, there's a lot of examples where Sri Lankan companies have built, like, again, it's enterprise solutions for global companies, right? So we look for that as well because and technology is such that now you can be anywhere. So our whole ethos inside is that you have to be globally relevant but locally inspirational, right? A lot of people get it other way around. They try to be locally relevant first with global ambition, right? So we do the flip of it. So we want the founders to be building something which is of global relevance from day one. But to your point, so there is certain some of these things that are happening in Sri Lanka. Again, for an example, everybody would have, or anybody who's listening to Sri Lankan news would have seen that we've had economic crisis, a financial crisis, and all of that, and we've had migration skyrocketing. But at the same time, there are people who are coming back. People who left the country 20, 30 years ago. They're moving back, and they're moving back for various reasons. One reason being the quality of life. Sri Lanka is a South Asian country, but it's not like a typical South Asian country. It's a lot more better in terms of work-life balance. You're much easily integrated, and within a short span, 1 2 hour, the landscape changes dramatically, so that you can build from anywhere, sort of a model. So these things also come into play as well. Uh, but the other part of it is, like, if you look at certain trends, we have a lot of people who are foreign educated, so they would go get the education, and they want to come back and build, because if you're going to build for the next 10 years, there's plenty of opportunity in these kind of markets. And we see similar things happening in Bangladesh or Pakistan. And you want to be there when things get happen.
Speaking of investing beyond Sri Lanka, you do invest beyond Sri Lanka, and you invest heavily beyond the local market. Before you do this, do you look at certain key infrastructural points, regulatory points, anything that can impact your investment or the companies that are in these countries beyond, let's say, Sri Lanka?
We do. So nVentures is a licensed and regulated fund. We are licensed under the Monetary Authority of Singapore. So we want to do that from the get go. We want to make sure that we have the proper governance structure from day one, and also it also allows us to take some of these risk in markets like Bangladesh, like Sri Lanka, early on, right? And my philosophy around this, especially when it comes to investments, right? An early stage, everybody understand that there is a very large failure rate, 90%, irrespective of where you are, right? So the way I look at it is that there's two risks as an investor. One is risk of failure. So I invest in, let's say, Aakash, you start a company, I invest $100,000, then I have a potential risk of failure, which is I lose $100,000, which is 1x. And I think that what a lot of people don't understand is the other risk is the risk of omission, where you pitch to me, I pass on the deal, and then you go on to build a company, and I don't get that return because I'm not part of it, right? So the risk of omission is much greater than the risk of failure, right? So you start learning a lot of these things when you start working in it. And being in Singapore kind of allows us to reduce a lot of those challenges that you mentioned. But obviously there's a lot more country risk and all of these things come into the play. But I feel that that's also what makes us unique, in the sense that's what it's exciting. And that's why we do, for an example, we love doing pre-seed and seed stage companies. I don't think we are the right investor for Series B companies, and I wouldn't want to do it. For me, it's chaotic. The early stuff is a lot more chaotic, but I enjoy doing it. So you want to try and figure out what's your strength as well when you're in this space.
And one of the things that you've laid down as your strengths is identifying founders who don't come from tech hubs. You have a very clear uh, blog post or approach in that, right? And you invest in these quote unquote scrappy founders.
Yeah.
What is your thinking behind investing in these folks?
I mean, if you look at tier two, tier three cities, and this goes for India as well, right? And this is what we've seen. You, contrary to popular belief, the founders in these markets, because you don't have a lot of the resources, you are by default very resourceful, right? And you have less distractions, for an example. The third point being, you cannot afford to fake it till you make it, right? Because your startup is what's literally putting food on the table. So they might not have the business acumen, but that's something that you can always grow. And that's what we've seen. So a lot of our companies, we have a company called Nanosoft, which is building a core banking solution. They are in a city called Kulia PTA, which is a very remote. I wouldn't even call it a city, a town. It's over 100 kilometers away from Colombo. And initially, when we invested, we were thinking of the founder moving into Colombo, just like what people do now, right? Even in India, if you want to build a startup, you go to Mumbai or you go to Bangalore because you want to be in part of that hub. But that was our thinking as well. But then we visited them, and when we saw the environment that they're in, we realized, wow, okay, there's zero distraction because it's literally the only tech company in that village, right? So anybody who's studying tech or who's interested in tech is wanting to be part of it. And they get a lot of things done because they're much more closer to the customer as well. If you come to the city, then you're further away from your customer. And this is, again, it's important because you're doing B2B kind of companies. So, we felt that it's a lot more easier to work with this, or we've rather had, the better way to put it is we've had better luck with tier two and tier three city founders.
But is there a flip side to this where if they're not part of the ecosystem, whether it's the ecosystem in Colombo or Bangalore or Bombay, they're not going to either meet partners, meet premium customers, or slightly skill up in that way?
I don't know. I mean, if you build something good, if you build something that is truly remarkable, I think the customer doesn't care at one point, right? And again, it's probably true if you're trying to do something in the B2C side of things. Maybe you need to be in the hubs, but more and more, I see the ecosystem being more of a distraction. um, and you're always fighting. It becomes it becomes an ego system, right? Because you have to fight with each person's ego that is there. But like if I take this example of Nanosoft, you're building a core banking solution in a village which is 100 plus kilometers away. Immediately people are curious as to what you're doing, so that becomes an interesting story. And then partners or investors or anybody wants to know, okay, what's going on, and then you go to them and then you realize, oh wow, these guys have already digitized 500 plus societies that serves about 2 million Sri Lankans, all the way being in a village, right? I think that becomes part of your story. The second thing is, I think technology has evolved to a place where uh, the ecosystem can be anything, right? And to quote Odin, Asgard is not a place, it's the people. So similarly, the ecosystem is not a place, it's the people that surrounds you. And I think you can get connected to people a lot more easier, irrespective of where you stay now. And thanks to platforms like LinkedIn, look at us. We met maybe a month ago, and we're doing a AMA session.
Yes, and we're grateful to that. And
Yeah.
if the people who are listening in, you can also, through the power of technology, drop in your questions in the comments. Another approach that nVentures has taken is focusing on the brain gain movement, which is founders or operators in the West moving to Southeast Asia, South Asia, Sri Lanka, using the insights that they have learned from their time there and starting companies here. In your conversations with these brain gain movement founders, what insights are you seeing from them that they have learned from their time in the West?
Oh, there's a lot. They come back with a lot of knowledge in terms of building cultures, how to move fast, getting organized, real operational related things, right? Because even scale, right? Everybody would talk about, okay, how do I scale this? But nobody has scaled it and ran an operation. But these founders would have done it, right? Because they were part of Google, Facebook, or whatever. So the knowledge that they bring back is just incredible, and that essentially becomes a magnet for the young talent to come in, because the younger generation wants to come and work for somebody who was part of Google for 10 years, building YouTube or whatever. They want to be closer to someone like that. The second part of it is they also have a network. They have a support system, and a lot of these things that comes with it. And that, you're like a 2-degree separation, so you're able to kind of, whether it's to raise capital, find partners, find expertise, and so on and so forth, becomes a lot more meaningful.
And when they come back to Sri Lanka, are they using any sort of the foundational advantages that Sri Lanka has to offer? I'll give you a corollary example from India, right? Folks come from the US and they use, let's say, the India stack,
Hmm.
the payment stack, or the fact that labor is cheaper here compared to places in the West. They use those features here to scale up their businesses. Are they using these similar advantages within the Sri Lankan ecosystem to scale up their own businesses? If so, what are those advantages that they're using?
I think the main advantage is the high end talent that they're doing it, and like I said, we have a history of building enterprise level products for the global, and we've had exits, multiple exits in that front. Sri Lanka, also a little unknown fact is, outside the so Sri Lanka has produced a large number of financial qualified professions, right? So whether it's ACCA or CIMA, AAT, CFA, these are very high end this thing. And I think, if I'm not mistaken, outside the UK, Sri Lanka has the most number of CIMA qualified professionals in the world, right? So we've always had that kind of domain expertise coming in. So the number one is essentially, I would say, the talent part. And I think the second one is, you can debate whether it's a good thing or a bad thing. I think the quality of life. That's one of the reasons that driving a lot of people to come back, is that the quality of life is a lot better here, even compared to the US. And then you're able to have both, work life balance, or however you want to put it, and build a company.
And one of the things that you would nVentures do is use Sri Lanka as like a conduit for Southeast Asia through expansion to different countries, much more higher in terms of GDP per capita, etc. How do you identify, or how did you identify Sri Lanka as a gateway to Southeast Asia? And how does that benefit the companies that are either setting up or working with you?
So we see so we are Singapore, Sri Lanka kind of a fund, right? So between Sri Lanka and Singapore, we feel like we can be the bridge that connects South Asia with Southeast Asia. That's one part of it. The second part of it is, when you're in Sri Lanka, you have this 180 degrees of opportunities, starting from GCC, South Asia, and Southeast Asia, all within like a 3.5 hour kind of a duration, right? And generally what happens is Sri Lanka is a hub because it's, world, now it's world famous as a tourist destination, and it's a lot easier for people to access. So for an example, if for you sitting in India, Pakistan is not a market, but then for entrepreneurs these things don't matter, right? Because it's all about building global companies. But then people tend to come into Sri Lanka because it's easier, and then you try to do a lot of these business while you're here, and then you kind of go back to. So we kind of become like a neutral ground for these type of things. The second thing that we've noticed, like with specifically with our portfolio, because we are heavily into the fintech space, what's happening in, and all of us, all the founders are in one WhatsApp group, right? So what's happening in India, they'll share, oh, this worked in India. They're like, oh wow, okay, we can do that in Bangladesh, we can do it in Sri Lanka. Or one of the Sri Lankan founders will say, oh, we had this problem, we solved it by doing Y. And the problems are very much similar, so the knowledge sharing is a lot more higher because you're not really competing in some of it. But if you look at the other benefit is that individually some of these countries might be high risk, like especially Sri Lanka and Bangladesh, we fall into that high risk category. But then the way that we've done our investments is that we have similar investments or startups trying to solve the similar problems in these markets. So together as a portfolio, it's a lot more valuable. So somebody who's coming in, especially a large investor, maybe there's opportunity for M&A. I don't know. Not that we've done it, but at least we have that opportunity to create it. So you have those advantages.
Right. And one of the examples of those advantages was a recent company called Kaiju Labs, which I want to talk about. And after this question, I'm going to have a look at the LinkedIn chat if we have any questions from the viewers. Like I said, Kaiju Labs, a Web3 wallet service provider, recently acquired by KAST, which was your first exit. And this is slightly outside the domain of fintech, health tech, SME tech that you typically invest in. What are the lessons that you learned after investing in these quote unquote unconventional founders?
I mean, it was super fun, right? I would still say it's in the fintech space, even though it's Web3. But that was a classic case, right? Like we didn't understand what Web3 at the time was, but we knew the founders. They were from a tier 2 city, but they knew how to build great products, and we just wrote a check purely based on gut. I think Cost raised $10 million, through which they ended up acquiring Kaiju. And they're funded by Peak 15 and the equivalent in China. I forget that the VC, the Sequoia, which broke away the Chinese arm went one way. Peak 15 became India and Southeast Asia, and then Sequoia US is Sequoia. And now the entire product is built here in Sri Lanka. So the team, we exited last November. I think there was about 4 or 5 at the time within Kaiju, which became into KAST, the product, and the 5 of them. And that 5 have now almost become 100 in less than a year. And everything is based out of here in Sri Lanka. And recently they had their office opening, and I was honored to be invited. And they were saying, like, because when the Chinese invested, they wanted development to take place in China because of the speed at which they built. But then so far we've been delivering that. So that was great to hear as well. But it was just one of those things. Obviously there is an element of timing was right, I think, element of luck. But then we also took the risk as well in just writing a check to these guys.
And are you looking at that as like an opening to invest in more fintech plus companies?
We are so with our fund too. That's the whole idea. But it's in hindsight is 2020, right? So I try not to kind of dwell too much on the successes as well, because that's one way of you becoming a fool, because you are the easiest person to fool, right? So I always try to stick to the fundamentals, but if there's something that needs to be changed in the fundamentals, then you change that, and not so much from a business standpoint.
Final question on the Kaiju exit is, you mentioned that nVentures is a feeder fund, or at least a feeder, maybe not a feeder fund, feeder for much larger
Yep.
VCs, probably later stage VCs. Could you explain how this process works for a startup who is looking at multiple rounds of funding, starting with a pre-seed investor like yourselves, and then possibly a larger investment from another VC?
Sorry, can you explain the question? I just want to make sure. Is the question around how do we figure the companies, or how do we kind of become a feeder fund? Or
The second, how do you
second?
become
Okay,
that, and what
right,
does that
right.
mean for a company?
Okay, okay, got it. So I mean, the other thing that we did in the last, for several years now, is that we built a good network of larger VC funds in Singapore. Obviously, for most of these people, Sri Lanka is too small, too risky, and there's not enough data about the market for them to make an investment. So we build the relationships over the years, and what we essentially do is we come in that pre-seed seed stage, we invest in the capital, and then we work very closely with the founders to get hit the KPIs that would interest some of these larger VCs to have a conversation. That's the whole idea. And so for them, it's not about us giving 20, 30 companies. We are not a pipeline for any of them, but then they know that, okay, if somebody is coming from nVentures, then they have gone through a certain process, there is a certain standard, so they're more likely to have at least an IC meeting. But we obviously don't have any power in the decision making, but several of them have invested, including some high-end angel investors. So Accelerating Asia has invested, Tenity has invested, and there's a few others who have done that as well, and both as VC funds or as HNIs or family officers. So the whole idea is that it's not just the capital part. How do you then groom them and handhold them to a stage where they are more attractive to downstream investors?
Got it. And through your, of course, networks in Singapore and the US, like you mentioned, you have that. I wanted to speak about your anchor investor, Nsinga. I hope I'm pronouncing
Yeah.
that correctly. And you say through Nsinga, you offer access to about 10 plus markets. What kind of startups use this GTM channel? Is there a particular type of startup that uses it more so than the others? What do they use it for, and how does it benefit them?
Right. So Nsinga, just for background information, is a SI company or systems integrator. They do about probably $50 million ARR. And they primarily work with the banks, the telcos, in these markets. So the primary thing that we provide for our portfolio companies is that, because B2B is a very, very specific skill set when it comes to sales, pre-sales, marketing, and how do you do that. So that's the knowledge bit that gets transferred in. That's one way. The other GTM is specifically if you have certain products, because we are in the B2B space again, certain startups cannot, for an example, go and sell to a bank, because banks will have a very strict, you need to have 3 years of financials, audited financials, and they have different criterias. And banks are not really open to buying products from startups, because it's a lot of sensitive, and you also need to. So then the SI kind of acts as a partner that helps them do introductions. And we've done that for most of our portfolio companies, is because Nsinga does a lot of work with some of these banks. They're able to recommend for various things. I'll give an example. For Mintpay, very recently, we introduced to one of the banks that provided a debt facility. I think it was over 200 or almost $300,000 at no collateral, no security, and a very, I think it was AWRP plus 2%. which is very low rates. So we have services like that, which is essential for Mintpay's growth. These type of things are essential.
So there's a lot of downstream that happens with the companies that work with you, not just on the investment side, but on the use case side as well. And
In
Mintpay
the
is a
use,
company that, go
correct.
ahead.
Yeah, and there is, okay, what is the mindset? How do you approach them? How do you pitch this? When do you pitch? What's the order, or the frequency that you do? What solutions do you do? These type of inside sales part, that kind of, because the startups don't have, they might not have the capital to go and hire a B2B sales expert, who will bring in that value into the company.
Interesting. I have a question in the comments about the LPs. So I think it's timely that I ask it. Tim, who's founder of the Realistic Optimist, he asks, what arguments have worked and which arguments haven't worked when pitching to these LPs to take a bet on the Sri Lankan ecosystem?
Oh, the last part is easier. A lot of arguments haven't worked. Look, I think the traditional approach with this is to position it as give back. Um, I, we do it to a certain extent, but we want to make sure that it's a business decision, right? So we are very, very. We don't want it to be philanthropy, or we don't want people to feel good about themselves, so they're investing in, right? So we want to try and avoid that particular place, which is why we always talk about, we do about 30% IRR. So we are always talking about numbers whenever we speak to our investors. So that has worked, but then Sri Lanka has had multiple black swan events in the last 5 years. So I mean, we can't solve any of that, right? Like, I don't have a solution for the political instability. I don't have a solution for the financial instability, or whatever that is there. So there's always arguments not to. And what I usually say is that, again, it goes back to what we were talking. There's always a 90% failure rate, right? So if you're an investor and your goal as an investor is to be right, in terms of your decision, then if you say no to every investment that comes across, you'll be right 90% of the time. But that's not the point of investing, right? So it is a high risk side of it. So a lot of it is, you really have to kind of, the way that we tell is that this is, you have to be somebody who cares about investing in the next generation, because that's what hasn't happened for us, right? Myself and all my partners, we are where we are. We have very different age gaps, right? 10 decade plus age gaps between the four of us where we are. But we are here because we've taken, not because we've had support from our parents or whatever, because our parents didn't understand technology. We were the first generation, so we are first generation entrepreneurs. And that's because we've done that, because we've taken certain risk. So if you kind of keep on saying, okay, you don't want to invest in the next generation, then I think Sri Lanka will remain as it is. I don't think it's the government's responsibility. I'm not going to wait till somebody else does it. If I can do it, I'm going to go and do it. As that's usually our approach to some of these things.
And in your conversations with these LPs, and when you talk to them, maybe it goes into arguments or not, is there any specific quantitative metrics that you are saying, that you are sort of telling them about Sri Lankan businesses, young population, returning diaspora, etc.?
Yeah. So the three things are that there is early signs of brain gain taking place. Tier 2 cities coming up, and there is a shift in mindset. There is digitization that is kind of taking over. So those are the 3 points. But the argument against all of this is the fact that it's still a small market, right? Your liquidity is low. Look, liquidity is low in the region. It's not a Sri Lanka specific problem, except for India. Even in Southeast Asia, liquidity is challenging. But then that's why I said, if you don't want to invest, then you can easily come up with 1,000 reasons not to invest, if you have that mindset. So what I've probably gotten good at in the last 2-3 years, especially with investors, is within 5 to 10 minutes, I know whether, where this conversation is going, and I'll just kind of be very, very polite and end the conversation and move on. Because I can't just like it becomes a zero sum game. Some of these debates are zero sum, right? So there's no point in me wasting time kind of trying to prove my point.
I think of the three things that you mentioned, right? Digitization, the third point, is something that Arshad from Flash Health and Urpay, both your portfolio companies, have mentioned as well. Digitization is quite high, digital first companies. Despite the population being sub 25 million, it's still a fairly active, digitally savvy, and also fairly young atmosphere there. That said, do you think nVentures is going to probably move to a more B2C approach? Are you speaking to more B2C founders given that changing
No,
demographics?
no. So that was one of the things that we want to be. Like I said, we want to swallow the medicine that we give our founders. Right. Be very, very specific on your ICP. I think we're very good at B2B. We might not be the best investor when it comes to B2C. So I wouldn't I would discourage entrepreneurs to raise money from us, because I don't think we can add value. Because I think Koshla also said this, right? Investors add 70% negative value, so we're very, very cautious about that. And whenever we do an investment, that's one thing that we look at, is that okay, it's not just the investment. What can we do to move the needle forward? And it has to be significant, otherwise it doesn't make sense. And it's everything is tied up, right? Because it's early stage companies, it's about being able to roll up your sleeves, get into, whether it's, maybe it's, sometimes it's hiring, because some of these entrepreneurs, simple example, they don't know how to do an interview and hire a tech lead, because they've never gone through that, right? So their only basis of hiring a tech lead is to look at a CV, and everybody looks good in a CV. Sometimes, so we will step in and help them do that as well, because we have that's the value that we kind of bring in.
Interesting. And speaking of this, I've got one question which is similar. It comes from Isura. I hope I'm pronouncing that name correctly. He asks, so do you approach businesses with overlapping solutions to fill in overlapping solutions in the B2B space?
Not in the same market. There's a conflict of interest. Like, we wouldn't invest. I don't know. I'm not too sure of the, like, I don't know whether I understand the question fully. We wouldn't, we don't invest in competitors.
You mentioned you invest in the same or similar companies in two different markets,
Different
right?
markets, yeah.
Right. So let's say Sri Lanka and Bangladesh, Sri
Bangladesh,
Lanka
yeah.
and India, something like that.
Correct, yeah.
Is there any key points that you look at or learn from the Sri Lankan market? It's fairly different, especially in terms of population, but is there key points that you look at in terms of founders, business models that you use when you evaluate a company in Bangladesh? If so, what are those learnings?
I mean, we've done that. We've done similar type of businesses in Sri Lanka and Bangladesh, Sri Lanka and India. It's pretty much the same. The only thing is that we probably might, in that situation, have a little bit more insights on what business model works, or more importantly, what business model doesn't work. I think that's more important than knowing what works. Sometimes you don't know what you don't know, but you definitely need to know what doesn't work. So we would have that again. It goes back to hindsight being 2020. How can you use that learning and add value to your other partner? And then we would kind of, the entrepreneurs also work together, because they also, like, entrepreneurs learn from entrepreneurs a lot more than investors, right? So then they tend to have more open conversations about what to do, what not to do, what's the best way to solve X, so on and so forth.
Got it. And I think we're approaching the 2 o'clock mark, so I'll ask a final question.
Sure.
The markets that you typically invest in, Sri Lanka, Bangladesh, they've had black swan events in the past 4 to 5 years, right? How has this changed, let's say, founders' view of capital discipline, business model, as an investor to these companies in these regions? Have you noticed any sort of change in the mindset post these events?
So if you look at, I mean, we've been investing since 2021, and I think Sri Lanka went through this whole cycle from 2021 to 2023 was a brutal period. We still invested, right? And we're so grateful that we did that decision, because some of those companies were able, not only they were resilient, they were also very, very resourceful. And now that, Sri Lanka is on this upward trajectory, when we look at those companies, they're a lot more healthier, and they're in a prime position to really capitalize on the benefits of being resilient and resourceful during those times. So that's the mindset, right? If you are an investor who believes in emerging markets, then there is definitely going to be chaos. There'll be definitely more black swan events in the future to come, right? That's what being in an emerging market is all about. But you kind of, you want to, the fundamentals don't change, so you want to make sure. That's why I said, we don't want to kind of, just because we've had successes, we don't want to bring in the learnings entirely into it, because there's an element of luck and all these things involved. We want to make sure we stick to the fundamentals.
Awesome. And I think you've exemplified that theory through this conversation. Once again, thanks so much, Chalinda, for your time.
Thank you for inviting me and giving me this opportunity.
Of course, one thing that we'd want to do at the Realistic Optimist is to cover the Sri Lankan ecosystem in depth. Like I said, we've covered Flash Health through your introduction. Mintpay is again through your introduction. And if there are Sri Lankan startups or emerging market startups reading this or watching this, please feel free to reach out. We'd love to have a chat. Similarly, if you're an investor, please feel free to reach out. We'd love to have a chat. But that's it from us. Thanks again, Chalinda. I'll leave you
Thank
be,
you.
and thanks everyone for joining in.
Thanks, guys, and best of luck to you and Tim as well. Keep it up.
Thanks so
All right.
much. I'll
Cheers,
convey
guys.
this to him.
Bye-bye.